When all this thing started, we saw that NNPC were selling petroleum at much more higher price than Dangote, which a lot of people, of course, raise eyebrow against. That, of course, they should sell cheaper, but Dangote seems selling cheaper. But after a few weeks, we saw that flipped. That, of course, NNPC start to sell cheaper than Dangote. So what that means is that if you are taking from Dangote, then, of course, you have to sell at their prices. Definitely, it will reduce your profit margin. That's what I suspect is the issue. But I think it's the NNPC that will be in a better position to speak to those facts. Why, of course, the sales have dropped. We may need to know what are the dynamics that's affecting the pricing within the industry.
This is business landscape.
Now, the Nigerian National Petroleum Company Limited, NNPCL, recorded a sharp decline in revenue in January 2026, with earnings dropping to 2.57 trillion naira from 4.82 trillion naira posted in December 2025. Now, the figures were disclosed in the company's monthly report summary for January 2026, which highlighted a major contraction in revenue during the period, despite a slight improvement in profit after tax. Now, the report also indicated that statutory payments to the Federation account declined during the month. The NNPC remitted 726 billion naira in January, significantly lower than 1.27 trillion naira transferred in December 2025. Now, the figure underscores the volatility in the oil sector and its impact on the government revenue flows, particularly as global energy markets remain influenced by geopolitical tensions, fluctuating the crude prices. Doctor, what could be the major factor to this drop in earnings? What could be the cause?
Well, I can only speak from the point of speculations. NNPCL, of course, probably will also have walked down the road, because we seem to see some level of collaboration between the Dangote refinery the other day and the new GMD of NNPCL. So, which means, of course, they were agreeing to take petrol from Dangote, and then, of course, reducing what they used to do in terms of importation of products and the selling in the market and remain competitive. We've seen that happen. When all this thing started, we saw that NNPC were selling petroleum at much more higher price than Dangote, which a lot of people, of course, raise eyebrow against. That, of course, they should sell cheaper, but Dangote seems selling cheaper. But after a few weeks, we saw that flipped. That, of course, NNPC start to sell cheaper than Dangote. So what that means is that if you are taking from Dangote, then, of course, you have to sell at their prices. Definitely, it will reduce your profit margin. That's what I suspect is the issue. But I think it's the NNPC that will be in a better position to speak to those facts. Why, of course, the sales have dropped. We may need to know what are the dynamics that's affecting the pricing within the industry. But the fundamental issue here is still our inability, which, of course, Petro actually has spoken to, of NNPCL to actually own and run a refinery like a business. Now that government has privatized it and given it the power to run like a business, how do we fix our local refineries so that we are not going to be at the mercy of individual producers or import of these petroleum products, and we are in control of our market and take advantage of the provisions of the Petroleum Industry Act, and then leverage that to deliver petroleum product to the Nigerian populace at affordable prices. That is where it will finally have to be. But again, this also is speaking to the fact that, again, people are talking about the alternative to petrol. With this volatility, we may need to be thinking alternative to the areas where petroleum products are used, so that we can gain some respite from this geopolitical tension that is spiraling the cost of almost everything, because energy is life. And therefore, if you affect energy, therefore life is almost be sniffed out of the average citizen.
All right, so this revenue shortfall from NNPCL, how would it affect our budget projection and implementation?
It's simple. If the revenue are not coming the way they are, of course, FAC allocations, of course, to states, local government also will decline. And what that means is that if state governments, federal government, or the local government have made projections about the revenue that they are going to get based on what they have been getting historically in the previous year, and then there's a shortfall, then you will see those gaps. And I think that's not the first time we are having this thing happen. We remember that those years when, of course, the petroleum prices went to the rooftop between 2011 to 2014. We saw state governments who put hand in a lot of white elephant projects. If you take the state very close to us at that time, Ogun State, they were building multiple flyovers and bridges everywhere. And when by 2014 the price of oil dipped, those flyovers and bridges that they were building became dead trap. And up to now, they have not been able to recover from those roads. People would have preferred that they were in the state they were than they are before now. So what that means is that if you are having to base your assumptions on the fact that you are going to be earning more money, then of course, and the money is not coming, then you will not be able to meet the yearnings and the aspiration of your citizens. That is what it means. And that put a lot of pressure on government at all levels. And people won't be able to see what development. And of course, we are almost getting into election year. And an assessment of their performance will be based on how these situations and conditions are managed. So we just pray that this crisis do not linger, they get out on time, so that the world can experience some peace, and maybe the citizens will be able to heave some sigh of relief.
All right, so how can the country stabilize government revenue, of course, in an era of volatile global energy markets?
It's not possible to stabilize it because it's not within your control. It is when things are within your control that you can actually make effort to stabilize it. Management experts call the times that we are VOLCA, V standing for volatility, U for uncertainty, ambiguity, and of course, we discovered that the complexity of the environment makes a lot of things very difficult. Volatility, things are changing quickly as possible. Uncertainty, we don't even know what tomorrow holds for us. And therefore, when we are making our plans, we must factor in the global volatility or the uncertainty in our environment, the complexity in the management of all crises, and then, of course, the ambiguity that come with the world. So we can't be talking about stable revenue. It's not going to be possible because we cannot predict what's going to happen tomorrow. Even if nations are not going to war, natural disasters can actually happen because as we a lot is changed in the way things are done. Those years people talk about making a development plan for 30 years. But today when people are talking between 3 and 5 years, because everybody knows that technology changes overnight, and then within the space of an hour, a lot would have changed. And I think these are the issues that we must face in terms of projections and making budget as a nation.
All right, but Doctor, against this oil volatility, shouldn't we be shifting from being oil dependent to other non-oil exports, revenue generation?
I agree with you. That's what everybody talks about. We keep talking about diversification. Yeah, but if you have to diversify, you also must have both capital and competencies, which of course we currently lack. And I think that is where the real challenge is. We are not short of talking about diversification. But when you look at it and ask yourself today, where is Africa or Nigeria having competitive advantage? Is it agriculture? We can't say yes, because we are seeing that agriculture in Asia Minor, agriculture in the deep of Asia, and even in the Western Europe is even better than what we're doing. So we don't have competitive advantage anywhere. So it is a problem. How do we grow competencies? and capacity to actually produce some of these things is where the challenge is. Everybody understands that there's a need to diversify, but we don't have the capacity, as it were, to be able to actually pursue some of all these things that may give us additional revenue or earners, as it were. As we speak, even common agricultural products that we are supposed to be selling to other countries, we cannot. I'm not sure that today we can export corn out of Nigeria because we don't even have enough of it. And so we are still importing corn. We are importing rice. We are importing beans because we don't have enough of it. So these are the areas that would have given us competitive advantage if we have to produce enough. There's still palm oil shortage in Nigeria as we speak. So we still import some quantum of palm oil. So these are little things that you see that, of course, that within the agricultural ecosystem, Nigeria has not even been able to develop capacity to supply the world some basic agricultural products. These are the issues that we face, not to even talk about the almighty industrialization. So if we have to compete, we must grow competencies. Where do we need to have investment? Where, of course, we can focus on research and development and see how we can ramp up the things we currently do so that they can have competitive edge over some nations around us. That's where the cross of the matter is. Nigeria needs to rise up as quickly as possible. Huge investment in education, huge investment in research and development so that we can create other streams of income that are far better than what we currently get from crude alone.